Hey, what's up, everybody? How's it going today? It's now September the 17th. It's Sunday. We're almost wrapping up the week where we had some major volatility on some coins like TRB. Also, we're nearing the end of September, which means that Q3 will almost be done, and Q4 for the months of October, November, and December will officially be here, which will eventually lead up to the months of the halving in April. And the big question that's looming over everyone's head is, will the accumulation period finally begin? So let's get into a deep dive and a technical analysis on Bitcoin and the overall market. We're going to take a look at that. We're going to take a look at the market cap as well for how Bitcoin is trending against alts, how Bitcoin's trending by itself as well for total market cap, how it's trending against the total three, so which is all of the total crypto cap versus minus Ethereum and Bitcoin as well. And we're also going to take a look at some of the possibilities that could come up ahead for Bitcoin and especially what these altcoins can do. And I'm also going to talk about the portfolio of mine that I'm running right now and some of my plans in the future to accumulate further, and especially what is in my portfolio currently right now that's valued at about $2.5 million. So let's get into it today. So thank you very much for joining me. It has been a while since I've released a formal video. Been very busy day trading with the Discord group, of course, trying to capitalize as much as I can on this very slow market, which I do admit has been a very difficult market to be trading so far. And always keep in mind that the effort that you put into the market right now during these types of markets, despite how much effort you put in, you can put in a whole month's worth of effort. But when it comes to trading for 1 week or even a few days in a bull market, that profit and that potential for success is going to highly exceed the effort that you put into right now. So now is the time to preserve your capital. It's a time to maintain it and protect it. We have, excuse me, I can't speak properly today. It's been a while since I made a video for you guys, and I do not want to edit this. So it's important to preserve and protect your capital, and that is one of the only ways that you will be able to grow it in the future as well. So Bitcoin has been, from a technical analysis perspective, Bitcoin has been trending in these regions for a very long time period now because of these major resistance zones and support zones that we've seen before. As you can see here, this white line that I'm about to draw has been trending since the beginning of January of 2021. So from a technical perspective, you can see this massive 2.5 year resistance slash support that now forms at a resistance. So you can firmly say that around the $31,000 region, we're most likely finding a major resistance. And now if we talk about it from the perspective of a chandelier exit indicator, which is measuring the volatility based off of the average true range, you're going to see that we are just about to near a support around and above the $25,000 region. We have two major support points right here. We got one from August of 2022. We got one from February of 2022, and another one of January this or June this year. So right around this region, we are going to find out most likely what is going to happen. I do believe that Bitcoin has already reached a bottom of last year or early this year, December, January. I don't believe that we're going to get lower prices than that. If we do, Bitcoin's going to have to drop a substantial 42% or even lower than that. I don't believe, based off of the Bitcoin dominance, based off of this positive news surrounding BlackRock ETF that will most likely get approved, Grayscale as well, I believe that Bitcoin has absolutely reached the bottom and it's very unlikely for us to see a lower price. And let's keep continuing with some Bitcoin predictions. I still believe that Bitcoin will be accumulating, especially because of this positive news that I'm mentioning. And we're most likely going to see a heavy accumulation and distribution phase during the months of October, November, December, leading all the way up until the halving of Bitcoin in April of next year. So from another technical perspective here, we can see that Bitcoin was holding a pretty much a 7.5 month support trend line here that finally broke to the downside. So of course, when we break it, we're going to find the next relevant support level, which was around 25,200. Now let's take a look at the Bitcoin index. This is another really good chart to be taking a look at here. It shows you the price action of the entire time period that Bitcoin has ever existed. So taking a look at here, we're going to take a look at the moving averages of the 200 and also the 55. I use the 55 simply because it's a Fibonacci number and I've always used it. So the blue line here, as you can see, is the 200. and the yellow line is the 55. And right now, we're in a very uncomfortable situation where these bands are squeezing into one another. Price is trying to stay above it, trying to bounce above it. Every time we hit this 200 moving average on the weekly, we tend to bounce above it. We almost fell below it, as you can see here, for a small period of time, but every time we get there, we just seem to stay above it. Here was a rejection that we saw for the first time, trying to get above it. We fall down below it, and then surely enough, we get right back to the top. We fall below the 55, hovering around there, and we bounce above the 200. So this 200 moving average, this is the EMA, by the way. It seems to be incredibly consistent so far and holding above this range of around 25,200. If we fall below those EMAs, we're most likely going to retest a lower price range of near $21,000. If we take a look at it on the daily, another observation of the daily is that we are likely to death cross. So when a death cross occurs, this refers to a higher moving average crossing to the top side of a lower moving average. So in this case, the blue line will get to the top and the yellow line will get to the bottom, which signifies that a death cross occurs when the lower 200 moving average, or sorry, the higher time frame moving average of 200, it crosses above the lower EMA of the 55. So that's always an indication that we might see some potential downtrends for a while. Let me just give you an example of the 2017 market here. After we finish that gigantic bear market or bull market cycle, we see that it golden crossovers many times and then it death crosses back as well. We see it death cross once there where the blue gets on the top, golden crossover, death cross, and here it stays death cross for a long period of time. Here it golden crossovers, and here it finally starts to death cross again, golden crossover, death cross, and then this leads up into the bull market. See this, it golden crossovers and stays up there. And then after you get a gigantic rally like that, you would then devise a similar strategy to exit on a higher time or on a lower time frame rather. So you see this parabolically moving to the upside. So it would be in your best interest to take profit on a lower time frame when we perhaps get another death cross. So you can see here that we've only crossed over a few times so far since the major bear market began. So if there's any indication of using golden and death crosses and golden crossovers, it's to say that it's going to happen multiple times. No matter what, you're going to see it go back and forth. They're going to fight. There's going to be a tug of war that will constantly be occurring. And eventually, the bull market will begin with the 200 moving average supporting on the bottom throughout the entire rally to the top side. So right now, not the best indication on the daily. Let's take a look at the monthly and see how these moving averages are trending. So we can see on the monthly that the 55 moving average is heavily favored. If I change this to 50, it would look even better most likely. See this right here on the 50? It shows that it's been supporting for a very long time now since we crossed over above here in the March range. But of course, as you know, I'm a Fibonacci trader. I like to keep things at 55. But you can see here that it still stays above it very nicely. So an observation that we can make on the bullish side is that the 55 EMA has held traditionally for a long period of time. If you extrapolated it, that's a bad extrapolation, excuse me. If you extrapolate it right over here, you can say that it started since the beginning of 2011, 2012, and it held every single time since. As you can see, held there barely, poked a little bit, but still nevertheless did. Wick, okay? And here, we broke below it only slightly. So only slightly, and then we popped right back up there. So the 55 moving average on the monthly time frame is a great indication of where price action is likely to trend. On top of the weekly as well, where we're going to use the blue line as an indication of how Bitcoin has been likely to trend lately on the 200 moving average. You can see that on the weekly, the 200 moving average, it held the exact same way that the 55 did on the monthly chart. So here we're getting some great price action, falls down below it, goes back to the upside there. So right now, speaking of market cap, the entire crypto market cap has been trying extremely hard to break above this resistance range of about $1.25 trillion. And now we stay at the weekly 200 moving average unable to break it. It's going to take some time. On the lower end, what we can see is that this support range around the $761 billion range that held since June last year and also early this year, it's going to likely be a really good support market cap that will most likely hold. And if we take a look at Bitcoin dominance, we saw that Bitcoin dominance, it peaked up extremely hard to 52%. It broke above this resistance here that was holding for a long time. It held here for about 2 years. This resistance of around 48.5. We finally break above it near the May-June period, and now we're actually staying above it. So what it seems like it's happening right now, because the Bitcoin dominance is breaking to the upside and maintaining this over the 48.5% market cap and dominance, it seems like the alts are bleeding off right now, as you can see. So if we take a look at, for example, so the total right here, this is the market cap of the entire crypto market, everything like combined, all the alts, all Bitcoin, all Ethereum, okay? This one right here is the total market cap of all cryptocurrencies except for Bitcoin. So it's the total market cap minus Bitcoin. And total three, it's going to show you the market cap of the entire crypto market minus Bitcoin and Ethereum. So basically all the altcoins and not counting Bitcoin or Ethereum, okay? So if you take a look right now at the way the market cap is for the total, you can see that it's slowly falling off. Okay, I'm gonna go to yeah, weekly is good. Okay, so it's slowly falling off from like the higher ranges. So up here, you can say it fell down about 15%. Now, if you take a look at the market cap from say March or even up here as well, you can see that it's falling down the equivalent amount. But if you take a look at some of the alts that I'm following personally for my portfolio, there's no doubt in my mind that these altcoins are bleeding off compared to what Bitcoin is doing, and they're moving down further. So if you take a look at, for example, Algorand, okay, that's a coin that I'm heavily following. It actually made a new low just in August already, and it's extremely low compared to other coins. So some coins made a low in the December range, as you can see here, but they fell down below and made even lower lows. Some coins like Cardano, okay, Cardano are staying at the exact same point as the lows this year already. Okay, some coins are staying a little bit higher than the low that they made. Actually, nope, Matic fell down much lower, okay, much lower than the 2023 low. I think I'm thinking of Solana. Okay, that's right, Solana did not fall down lower than the low it made in the early year, okay? So, but some coins have been destroyed, like ICP as well. But what I do know is that no coin, no altcoin, except for some coins like TRB, they've actually made higher highs than the high in February and March. So you can see here in February and March, some coins like ICP made a huge high after reaching the low of December. So you recognize that gigantic rally. But as soon as it hit it, they've either fallen below the low that it made in 2023, or they're slightly hovering above it in this range. So in my opinion, altcoins are entirely bleeding right now. And I just cannot see these altcoins finding a low like anytime this month or next month, because Bitcoin dominance is still extremely high. And because of that, I think that Bitcoins are still going to bleed off while Bitcoin gains more of a dominance. And it's generally speaking leading up to the Bitcoin halving as well. I believe it is impossible for alts to rally with Bitcoin because the accumulation and distribution phase that is likely to happen during Q4 for Bitcoin leading up to the halving, and especially Q1 next year as well. I believe that the alts are going to bleed and Bitcoin is going to rally to a much higher high than we are now. So by the time April hits next year, I expect Bitcoin to be at a much higher price than it is now. So I just cannot see altcoins rallying. And because of that, that's going to lead me to my portfolio that I'm going to mention, where right now I'm more cash heavy. I've taken some heavy losses. I was down about 700K in my portfolio. I cut some of those losses because I would like to have one, cash on hand, and two, in case it does drop further, I'd like to perhaps buy a little bit more. And three, I want to mitigate some of my risk. So some of the coins that I'm looking at in my portfolio are as follows over here. Just gonna move my camera for you guys to see. So I'm taking a look at Algo. Yes, I'm still interested in these coins despite the SEC scares right now. If XRP was anything, it's gonna show that coins like Algorand that are targeted by the SEC, it's likely to make a recovery eventually. So I'm looking at Algorand, Dot, Cardano, Matic, Polygon, Solana, Internet Protocol, Avalanche, Near Protocol, HBAR. I'm also looking at Optimism, Pendle, Uniswap, Atom, and ARB. So these are the coins that will heavily be in my portfolio. I don't know about Pendle yet, and Atom. I'm not really the biggest fan of them, to be quite honest, right now, but I'm definitely favoring Uniswap and Arbitrum quite a bit right now and extremely heavily. And if I had to rank my holdings right now, this is pretty much my ranking. Actually, I'm holding more Internet Protocol than Algorand right now, and more ADA than Algo. More Matic, no, more Sol. HBAR is the least. Okay, this is right. I'm holding Polkadot the most. I just love their project so much. Cardano is going to make waves this year. Algorand, I still believe it is one of the top contenders for a coin that will rally tremendously. And of course, it's important to balance, a delicate balance between these blue chip coins that are top 100 and perhaps doing research on a new sector that could possibly pave the way for some massive gains. If you always play it safe and go for these coins that are blue chips, they may not outperform, or they're most likely not to outperform some new sector, some new coin that is coming into play very soon. And these coins have most likely all made an all-time high already. So it would be very difficult if you think of the statistics, right? 90% of all coins after the first bull run, they do not make an all-time high again. So based on those statistics, maybe these coins are not likely to hit an all-time high. That's why I'm looking at new coins like Arbitrum that have been just released, like Optimism, right? These guys haven't been around long, like Pendle, like Atom, right? So Atom has been around for a long time. Okay, I apologize for that. But coins like Algorand, I do believe they have some massive potential this year to do some huge waves. So now I'm at the point where I'm researching and taking a look at all coins to see what are some hot new potential sectors out there. Takes a tremendous amount of research to put in this time to learn about it. So make sure you're doing your due diligence. And I recently discovered this chart. I want to talk to you guys about it. Credit goes out to Benjamin Cohen, of course. I don't ever take credit where it's not due. So I want to talk about this very interesting chart that I found here, okay? So this chart right here, this is the total 3 market cap subtracted by the USDT market cap divided by the Bitcoin market cap, okay? So you're taking the total 3, which is referring to the total crypto market cap, but you take away Bitcoin and Ethereum. So subtract Bitcoin and Ethereum as market cap. So you're basically looking at just the altcoin market, all right? And then you take that, you divide it by the amount of the market cap of the USDT, of Tether, and then you divide it by the Bitcoin market cap. And what you're left with is a ratio of what the altcoins could be at, okay? A ratio of what, like where, how it could possibly be a ratio of the market cap when we get to an all-time high versus the market cap of the altcoins, okay? And generally the ratio, the last time we reached an all-time high in 2017 roughly, and the bull market last year, it generally got to a ratio of about a 1-to-1, which is very surprising, okay? Incredibly surprising. So if you take, once again, the entire crypto market cap minus Bitcoin and Ethereum, you subtract it from the Tether's market cap, that you divide it by the Bitcoin market cap, you get a ratio. And right now, what this ratio shows is that we're actually only at 0.47. And what this shows is that if you take a look at where the alts bottomed out before we began an alt season, it shows that in 2019, leading up to pretty much December of 2020, this shows that the altcoins bled until the ratio, okay, of Bitcoin of that ratio I'm talking about was much lower. So based off of here, it shows that alts have a potential to drop another 45% or so. That is a gigantic amount. So what this means, to break it down, is that Bitcoin is going to rally leading up to the halving. The Bitcoin dominance is going to get higher. The distribution and accumulation phase is going to happen in Q4 and possibly early of 2024 next year. And this is going to happen because of the Bitcoin halving. And while this happens, this chart shows that there's a potential for the altcoins to bleed even further back down to that support ratio that I was referring to. And the support ratio was roughly around 0.27. So this shows that there's a possibility of altcoins bleeding another 45% to the downside. So this is incredibly scary when you think about it. So the altcoin market could absolutely be bleeding. And perhaps the total crypto market cap will actually stay the same, but alts are going to bleed, and that allocation from this total market cap will go towards Bitcoin instead and removed from the altcoins. So I wanted to leave you guys with just a 21-minute video. I don't want to make it too long. And this week, I just want to remind you guys of coins like TRB, okay? You got to avoid coins like TRB, guys. Coins like TRB are incredibly dangerous to trade. Any coin with a high funding rate is going to screw you over. The funding rate is imposed by the exchange to try to minimize the gap between the spot and the futures price. And because of that, you're going to get a negative funding rate, which is going to incentivize the futures market to catch up to the spot market, to long it. So if the spot market price is higher and the futures market price is lower, and you actually decide to short it, but there's a negative funding rate, you're going to be charged a percentage after that negative funding rate expires. Because of that, there is a guaranteed chance for massive volatility. And the last thing that you want to do is try to take a chance shorting a coin like TRB. So I highly recommend that you stay away from these types of coins that are very alluring to trade, but they have some massive volatility that will eventually go the other way and cause some massive profits and massive losses. Here's an example of volatility in a 30-minute candle where it dropped, like this total drop was 20%, and then it rallied again right away, 30%. So you don't want to mess with these types of coins with huge wicks that go to the upside, like 10% wicks. You want to trade a coin that's a lot more stable, that has a lot more predictability as well. So stay away from these types of coins when you see them. Trust me, you can. There's two spectrums. There's the extremely volatile coins, and then there's the very boring coins that go sideways. Try to find a coin that is in between, that matches or meets the basic criteria of volatility and stability. This is how you're going to also ensure that there's less risk to trade these coins. So have yourselves a great day. If you enjoy my content, hit me up, guys. Hit me up with a like. It helps me with the algorithm, and it makes me feel like I'm doing a great job. And make sure you're subscribing if you haven't already. I look forward to seeing you in the next video, and especially in the next bull market. Bye now.